Welcome to another episode of Ask the OG. Crazy. Today's market action was just absolutely crazy. Dow up 3,000 points. I haven't looked at the numbers exactly, but my guess it's a record for a one-day increase for the biggest index. Why did that happen? Well, Trump announced, we're going to reprieve tariffs for everybody except China. Okay. The market loved it. They loved it. Let me tell you something. One thing, if I can offer any wisdom to you as an investor, is don't pay attention to what happens in one day. Don't pay attention to what happens in 3 days. Your job, if you're a real investor, and let me tell you this, it's hard to be a real investor. A real investor understands what the hell they're buying, why they're buying it, what the long-term outlook is, and they don't care about the price. In the short run, they don't even look at prices. They make a decision, they make an investment, and then investment means for a long duration, not, what am I going to happen in a week, a month, 6 months? That's not investing. That's casino, which is cool. Casino, believe me, I was a gambler. I was not an investor. I was a gambler for decades. And sometimes you win big, but at the end of the day, gamblers always lose. Always lose. Not even 1%, always. It's axiomatic, it's universal. If you're in markets and you're worried about monthly and weekly activity, that's called gambling. You're going to end up losing, even though you may have a great run for a couple of years. Yeah. But guess what? Gamblers always die broke. Let's talk about investing. Investing is a long-term process. When you buy a cryptocurrency, when you buy a stock, when you buy a piece of real estate, when you take on any financial asset, you have to know exactly why you're doing it, what you think the long-term prospects are, and that's how you make a decision. And if you do that with anything, a crypto, a stock, piece of real estate, you're going to do well. Versus what most people do is, again, they worry about short-term prices and they panic. And they end up buying at the top because they don't want to miss out, and they follow the crowd, and they end up selling at the bottom. Don't be that person. All right, let's talk about real trends that are going on. The big trends. Not what happened in the last week. Prices went down really hard. They came really back today. Let's talk about the trend. What are the most important trends when you're looking at financial assets? Let me tell you one trend: interest rates. The most important signal in everything. That's what the cost of money is, period. That's the most important commodity for economic growth. What is the cost of capital? Well, for 30 years, we had declining interest rates. From the mid-'80s up until 5 years ago, interest rates went one way for 30 years, down. The cost of capital lowered over a 30-year period. Now let's talk about what's happened in the last few years. What have interest rates done? They've gone from this ultimate low of essentially zero to, the 2-year rate, 10-year rate, we're talking 4.5%. That's really a 400x increase in just a few years. What's the long-term average for interest rates? Well, we're not there yet. What is the trend in interest rates? The interest rates determine the price of bond. It is so strong in terms of its influence on stock prices and overall economic growth. So let's talk about the big trend. Interest rates are going up. That is not good for stocks, and it is not good for bonds, and it is not good for crypto. But that's a big trend. That's a big secular trend. In any 3-month, 6-month period, who knows what can happen? Look at the big trends. Let's talk about another super important trend: inflation. They are tied together, by the way. And we could talk about what causes what. This interest rate, they are both interrelated. Interest rates and inflation are very tied together. Let's talk about inflation. Since COVID and all the money printing, guess what? We have had the biggest bout of inflation over the last few years that has taken place since the 1970s. Really, 50 years, which is pretty damn good, by the way. It's kind of remarkable that there has not been a big bout. There's been steady 2 to 3% inflation, but getting a 10% kind of inflation rate, which I still maintain we have, hasn't happened since the 1970s. So, what's going on with inflation? Well, depends who you listen to. The rate of inflation is coming down. But go out to lunch, go to the grocery store, go to the gas station, pay tuition, pay for insurance, pay for health care. Okay, I'm not this PhD macroeconomics person, but common sense tells you inflation is baked in the cake. And let me tell you this, the core cause of inflation, it's the increase in the money supply. And guess what? Money printing is just baked in the cake. It's why we're all involved in Web3. We know the Ponzi scheme of money printing and the Federal Reserve. It ain't going away anytime soon. It's not foreseeable. It'd be amazing if it did, but I don't think it's going to happen anytime soon. So we have interest rates, we have inflation. Then the other major trend is valuations. Look at valuations in financial assets, real estate, went up for 15 years. Steadily. We haven't had a real significant bear market since the global financial crisis ended in 2010. Since that ended, it's been 15 years of straight up. Valuations of equities and companies are sky high on every multiple, price to revenue, price to earnings. Looking at growth rates are not that strong. Anyway, the trend in valuations is we hit the peak right around December of January, and that trend, declining trend, is in place. So when's it going to end? I don't know, but the trend is in place and it's significant, multi-year trend. What happens day to day doesn't matter, or it shouldn't matter. And if it matters to you, you got to look yourself in the mirror and go, what the hell am I doing? And I'm going to be happy one day, sad the next day. I mean, don't do it. Focus on why you're doing it and don't worry about prices. Okay, thanks for listening to another episode of Ask the OG. We'll talk soon.